if you have held a company like now it's Hero Motors, right? It's changed. Pardon? Oh, it's called Hero Motor Corp. Okay, so if you held, let's say, for 20 years or something, what would be your return on that? Like, what would be the... Okay, so like 45x, 50x or something.
Excluding all the dividends, the rate.
Okay, 100x maybe. Yeah, so obviously the thing is that one of the things that happens in terms of human psychology is that if I've owned something and I just told you should look for long runways, right? And if you look at a company like Hero, there are so many advantages. Motorcycles are better in rural areas than scooters are, and they have all the distribution network. They've got this huge install base. They've got all the brand equity and all that. So for someone else to uproot that is not easy, right? And so there are all these positives, but capitalism is ruthless. It's the nature of capitalism to be people aspiring to take your moats away and such. And I think that if a person is holding on to Hero Honda because of the past, that may not be as robust as holding on to it because of having some view of the future. So the future has a way of unfolding differently from the past. So if you are able to, if you understand the business within a certain confidence, then you can look out 5, 10, 15 years from now and see that those aspects of the moat are going to be intact, and what the valuation of the business will be. So again, what is the Hero Motor Corp's market cap? Would you know?
20,000.
Pardon? 60,000 crores.
10 billion.
Okay. 10 billion. That's it. So the question I would ask, if someone is buying the stock today, is that how does it get to 120,000 crores, and how long does that take, or how long does it take to get to 200,000 crores, and how long does that take, and what are the circumstances, and does it company do heroics to get there, or it's going to get there because of all these natural tailwinds. And but I would say, holding on to it because, the dividend is more than the cost base, I think that is irrelevant. The cost base is irrelevant. I think the thing is that you look at it as if there are advantages. Of course, in India, you don't have the same dynamic, but in the US, we have significant tax issues. Long-term gains, yeah, so that you have no tax implications. And that's a beautiful place to be. And and so I think that if you have a view that this is a business that is going to double, triple, quadruple in value in the next 5 or 10 years, it's a great place to be, and should be there. And if you have a view that for whatever reason that may not be the case, or the odds are low, then you ought to look at something else. But I would say just identifying those long runways and being, I would say, non-emotional about how you go about looking at them long term is a good way to go about it. Yeah.